Hi, I'm Bobo and welcome to our weekly recap of Hong Kong real estate. Before diving into the local market, let's start with some international news. Last week, the US reported an increase of 272,000 new non-farm payrolls in May, far exceeding expectations. This reflects strong economic growth, leading the market to believe that the Federal Reserve might delay the first interest rate cut of the year from July to September. Additionally, it's anticipated that the Core Consumer Price Index, to be announced this week, will maintain a monthly increase of 0.3%, making it difficult to support a rate cut. With the uncertainty in interest rates, developers are rushing to sell their projects. CK Asset applied for pre-sale consent for their starter home project at Anderson Road in Kwun Tong in March. However, the Lands Department rejected the application, citing it as premature. The refusal was due to the developer's inability to provide an occupation permit and a pre-sale schedule as required by the land lease terms. According to the land sale terms, developers must obtain an occupation permit before selling the properties. This means the project must be sold as completed units. The project is expected to be completed by the end of September 2026, over 2 years from now. It will offer a total of 2,926 units, with no fewer than 1,000 units designated as starter homes, ranging from 250 to 500 square feet and sold at 80% of the market price, with sales targets set by the government. Looking at the first-hand market, several new projects will begin their first round of sales this week. First, we have Kennedy Town's The High Line, developed by Right Honor Investments Limited, a subsidiary of Shanghai Commercial Bank. Over the past week, they released 2 price lists for the first batch of 50 units. The discounted average price per square foot is about 21,300 Hong Kong dollars, which is 22% lower than another new development in the area, Kennedy 38, launched in 2011. The High Line's first batch of units range from about 200 to 500 square feet, with discounted prices from about 3.88 million Hong Kong dollars to 14.46 million dollars, and discounted prices per square foot from 18,405 Hong Kong dollars to 27,605 dollars. The High Line later released an additional 28 units with a discounted average price per square foot of 24,636 Hong Kong dollars, 15% higher than the first batch. The developer stated that the additional units include mid to high floor units with sea views. The project will offer 78 units for sale at list prices today, along with 3 units available for tender. Meanwhile, Henderson Land's The Haddon in Hong Kong also began selling 63 units yesterday, with 5 units available for tender starting today. Both these projects are relatively small in scale, so this month's focus is expected to be on Sun Hung Kai Properties' Novo Land Phase 3B project. The project comprises 2 blocks with about 770 units, ranging from studios to 3-bedroom units, including a small number of featured units. The main focus is on 2-bedroom units with 360 units, making up 46% of the total. Units range from 400 to 472 square feet in size, with about 170 1-bedroom and 170 3-bedroom units. Due to the absence of major new projects, only about 24 transactions were recorded over Saturday and Sunday, similar to the previous weekend. Even considering the 3-day Dragon Boat Festival holiday, there were only about 34 transactions. In Tuen Mun's Grand Jetée Phase 1 project, about 7 transactions were recorded, the highest number, with other transactions mainly involving unsold units, including Park Seasons in Lohas Park and Mori in Tuen Mun. In the second-hand market, trading activity increased due to a return of purchasing power. Over the weekend, Hong Kong's 4 biggest real estate agencies recorded 9 to 12 deals for the city's top 10 blue-chip housing estates, with all showing weekly increases. Hoi Fu Court recorded the highest number of transactions with 12 deals, a significant increase of 1.4 times or 140% from the previous week, and its highest in over 2 months. Many homeowners have been willing to increase their bargaining range, resulting in most transactions involving losses. Let's check out 3 cases that illustrate this. In our first case, a semi-new studio unit in Centra Horizon in Tai Po, measuring 243 square feet, changed hands for 3.66 million Hong Kong dollars, or about 15,000 Hong Kong dollars per square foot. Based on the original purchase price of about 4.01 million Hong Kong dollars in 2019, the seller booked a loss of about 350,000 Hong Kong dollars, or 8%. Next, at Harbour Glory in North Point, a unit bought in 2019 was sold at a loss. This unit, located on a middle-low floor in Block 8, measures about 1,300 square feet in size and features 4 bedrooms with 1 ensuite. It was sold for 43.6 million Hong Kong dollars at about 32,900 Hong Kong dollars per square foot. The original purchase price was 46.31 million Hong Kong dollars, and after holding the property for about 5 years, the owner incurred a loss of about 2.71 million Hong Kong dollars. Lastly, at Hoi Fu Court in Mong Kok, a subsidized housing unit with an unpaid premium also recorded a loss-making transaction. This mid-floor unit in Block A, measuring 432 square feet, was sold for 4.35 million Hong Kong dollars, or about 10,000 Hong Kong dollars per square foot. The original purchase price in 2020 was 4.7 million Hong Kong dollars, resulting in a loss of 350,000 Hong Kong dollars. For more information on the secondhand market, stay till the end of this video for this week's recap of secondhand transactions across each district. That's all for this episode. See you in the next.